Here we are.
Very good. So 143 registrations. Very good.
The people coming in now.
Yeah.
Good morning. Good morning, everybody. So we can see people still coming in. Let's wait for 1 more minute before we kick this off. Perfect. Let's get started. Still people coming in, but let's get started. Good morning. I'm the co-founder of Fraud AML. This is our first webinar in 2021. Today we're talking about how to detect the bots the right way and fraud and AML. Today I also have Richard with me. Hey Richard, morning.
Good morning.
So Richard is from Tigercraft, but also later we have a few slides where I will show some more details about Tigercraft. Perfect. Let's get started with some housekeeping items. So the first and most important, Fraud is organizing these webinars to inform our community. We really want to create relevant content. That also means please keep this lively. Please ask questions. Some of you already have seen the chat on the right-hand side, so please feel free to write questions. Richard and myself will take the questions straight away or at the end of our Q&A session. That's important. If you have any kind of comments, please feel free to comment during the presentation. In general, we like feedback also about the webinar. We want to improve and adapt. So if you have any feedback, what we should improve, please let us know. And one more thing about the tool, we just changed to a new webinar tool called Webinar Jam. And on the top, you have a button called Reconnect, button. So in case you're losing connection or something goes on, just press the button and it should be back to normal. Perfect. Let's get started. One slide about our company, about Fraud, that also people who don't know us get a bit more details about who we are and what we are doing. We are headquartered in Munich, that's where I am based, but we active global. We have a team around the world. We have been starting the company almost 4 years ago in 2017. But Fraud is a global community fraud fighters. So our vision is to get all fraud actors together. Is the fraud provider, is the payment provider, is an analyst, is a bank. So we're really trying to get the whole community together on our platform. What we're also doing, we're acting as consultants or interim managers. So we're helping banks, payment processors, merchants, or any kind of solution providers. And that also gives us a lot of insights in where's the industry going. And I also have later a few examples from my consulting projects, which I'm going to share with you. Perfect. Then also one slide about TigerGraph. Richard, that's yours.
Sure. So TigerGraph is a young company. We build a data engine product, which we found has been very useful and is now quite popular, certainly in the US and also now internationally. What we do is we effectively do something much faster than other people can do. We can perform advanced analytics and machine learning on data which has been connected, and we do it having very high speed allows us to do things like real-time analytics, which we're finding is accelerating the workflows of things like fraud investigators, for example, to make their lives much better, to make them more efficient. And nowadays, given that fraud is an increasing problem, both in the regulatory space as well as in the pure volume space, people are finding these tools are improving their performance of their fraud analytics and indeed their fraud investigation teams by a significant percentage. There's some details on here. I don't want to read all these things, but fundamentally, we can integrate with your existing systems very well. It's a very easy to use product because the language we use for this is not so different from what people are used to, which is SQL. And also we can install it either on premise or indeed we can put it on the cloud if you have a cloud strategy, or both. That's not a problem. And in terms of who's using us right now, I believe we've now got 4 of the top 5 retail banks in the US, and indeed 2 of the 3 largest banks in the world are using us for various parts of their fraud workflow. And that's TigerGraph.
Thank you, Richard. Good. And Richard has some slides later. We just got one comment from the audience. Richard, I think your cable makes some noise. So maybe just keep in mind, maybe to not move too fast, otherwise there's some impact on the noise. Perfect. One poll. Let's get started. Now you know us a little bit. We also want to know who's actually in the audience. So I'm now starting a poll on the right-hand side. You will have now a red button next to the polls. We also want to know, who are you? Simple question, in which kind of organization are you working for? And just for us interesting, maybe we can also steer the conversation a little bit, depending on the audience. Let's give here a few seconds. This is a dynamic chart moving. So we have now quite a bit for banks, some working for fraud solution providers, and it's quite a big bucket working for others. So that's also an interesting mix. So we can really address all aspects which we planned in our presentation today. Perfect. You already have seen the objectives for today are very simple. The first one is really providing an overview about what are the challenges which financial institutions going to have or having right now. What are the main drivers for complexity? I mean, Richard already mentioned growing volume, regulations, and other topics. And then Richard is going to cover mainly topics 3 and 4 to really explain how you could take the next step with really interrupting your existing infrastructure, which is for many companies, let's say, a big challenge. And last but not least, Richard will show on a case study how to really connecting the dots in around 8 weeks. Time to value. Industry trends. I just want to set the stage. That's why I selected a few highlights from the last months. You might have seen this. I just move our, let me just see. I will just move us to the right. Perfect that you can see it. So in general, the trend is that the volume will grow, but also the amount of fraud will grow over time as well. I think that's an important message because we stay relevant as fraud fighters in the industry and in each company, that we're getting better every day to minimize the fraud losses for our organization. When we're looking at banks, especially, we have seen a lot of articles in the past that they get big fines. I want to point out to two numbers or two comments. One is last year, only until October, almost 14 billion have been fined to banks across the world. So it's not only one specific market. So you can see on the right-hand side, the US is quite on top, but also other markets are impacted by fines which hitting banks, mainly driven by AML failures or breaches. I think that's the kind of message of this post here. There is a lot of fines happening for AML breaches. One more specific topic which came up also recently is Capital One. One of the big banks just got a fine of $290 million also for AML failures. And on the other side, I just picked one article which is interesting. It's a bank from Denmark which actually cut jobs quite a bit, especially in the compliance department. So this article is quite interesting because it describes how the compliance team was growing over years to really manage all the requirements, managing the volume, managing all the new topics, and now they need to cut costs. That means they need to cut jobs. That means on the other side, they need to be better in automating and using better tools and using the data in the right way to really keeping up with the work. That's a kind of interesting balance, which we also will see later in our presentation. This is now an interesting overview. So based on our projects, based on our experience, which we gained over the years, we have seen a lot of topics which impacting fraud fighters around the world in the different industries. The banking and financial services industry is facing a tsunami of regulations. The pandemic also has driven governments worldwide to initiate new regulations that support digital banking. This also increased, let's say, the digital activity provides new opportunities for hackers exposing any kind of security weaknesses. I'm going to pick now two topics where I would like to provide two insights from my previous projects. One are card scheme regulations. So I was working for a big payment company, and they received a letter from MasterCard that a new card scheme regulation came up, where they're not allowed to process any more transaction from Crimea. So the little island of Crimea was not allowed anymore to process transactions for MasterCard. Now the question was, how do we do this? Which kind of data is required? Is this card not present? Is this POS transactions? Is it based on IP, based on BIN? So we had the effort of getting all this data in our system because we had not this data in our system so far. So it was quite an effort to really be compliant with this kind of rules. And this kind of card scheme regulations coming all the time. Of course, we have a few months to really plan ahead. But often, as we know, in big organizations, little data points might take a while to really getting into systems. The other example which I want to bring up is PSD2, strong customer authentication, risk-based authentication. What does it mean? For many banks in Europe, this is a big challenge, especially for 2021, but also now we're going to see how does it impact in this year. Because what does it mean? A bank would receive in the past very limited data about transactions, normally only the card information, the amount, the currency, the merchant. It's very limited. Now, with PSD2, they receive a lot of information, and now they have to make decisions, the risk-based authentication. Do they challenge the customer or not? Do they take the risk or not? And that is for a lot of banks a big challenge to really connecting all this data and really making good decisions. So this is two examples where we right now see a lot of challenges for our industry. I have one more topic here, which even makes these topics more interesting. So I called it accelerators. So we have social engineering going on. We have internal fraud, especially now with the pandemic, people working from home. We have a lot of phishing attacks, scams, and also major data breaches. Maybe the question to Richard at that point of time, based on your projects, which you are doing with customers at the moment, what is for you the biggest challenge for companies right now regarding to these topics?
I think there's a number of trends.
Richard, we have some audio challenges.
Can you hear me?
We cannot hear you.
Let's see. It should be switched on. I can hear it trying to do its noise. Can you possibly mute yours just for a second?
We cannot hear you, Richard. Still the audio.
Okay, we'll try this.
Okay, I think Richard is coming back in a second.
How's that?
With a better audio.
Is that better audio?
No, it's still the same, Richard.
Okay, I can still hear. This platform's tricky, isn't it? Okay.
No, still the same.
Still the same.
That's our challenge of being a live webinar.
I know it is. Okay.
That sounds better, Richard?
Is that better?
Perfect.
Okay, let's do it that way then. So the challenges, there's lots of them. There's something I was involved with in my previous work. I architected the push payment scheme for MasterCard, which is now being used worldwide. And the main problem for that is that there is a much greater scope for fraud because people could be receiving requests to pay for payment from anywhere. And that immediately increases the scope for fraud because rather than it being the customer presenting, then at that point, people could be presenting them with ways in which they can scam people. So basically, the scope for fraud is greatly increased. Push payments, obviously, you're no longer in T+1 territory. You're doing instant clearing, which means the funds have already gone, and that puts huge time pressure. The idea that you're going to have to do fraud prevention within seconds is totally different from having maybe up to a day to be able to deal with that. And I think the final point is from the regulatory point of view, the regulators, as you've shown already, is they are getting very active in pressing financial services to actually do something about this. And what that's doing is that the banks are then changing their rules, which is shifting the liability around the network towards, say, for example, merchants are taking on a lot more liability than they were before. These are all things that are putting a great deal of pressure on the traditional payment schemes.
Perfect. We just got one more comment, Richard, about the audio. Please disconnect the headphone because it's an echo. Okay, but thanks, Richard. I think that's good points. And actually perfect example, which leads you to my next slide. Because here I picked a very typical example for what we see right now is coming up. So let's imagine you are a German bank and Ronald is having a bank account and now sending money to Indonesia from an Indonesian IP address. So based on this information is the question, would you approve or decline this or rejecting this transaction? Most likely, you would decline this transaction because Ronald never did a bank transfer to Indonesia before. His IP is based in Indonesia. Looks from a first point of view very suspicious. But now, if we're adding more data, maybe it looks different. So the same device is used for the login like he used before already. We have seen credit card information that he bought an airline ticket. He already had ATM transaction in Bali. He used a credit card to pay a taxi. use the credit card to pay in a restaurant. And that is what we see right now, the interesting part, how really teams need to work together. Because based on this information, you would say this is a good transaction because he might going to buy something from a higher value and now he needs to do a bank transfer to the shop. And that is what we see is now disconnected in many organizations. So we have one team looking at the bank transfer topics. We have another team looking at the credit card information, looking about the issuing topics, looking about the transaction monitoring. But it's important that all this data gets connected to get a really big picture about the customer and making the right decisions. I think that's also why we asked Richard from Tigercraft to really join in today, to really show how to connect this. Because the biggest challenge is here really about systems, getting the data in place, but we're coming to this later in another slide. Perfect. The second poll is really about the question. Let me just see. What is for you right now the biggest challenge? So again, on the right-hand side, you can see the poll, and we're going to discuss these items now in the next slides. So please go to the right side to the poll. You can see the different challenges which we prepared, and we're going to discuss this in a moment. But it's interesting to see what are, from your point of view, the biggest challenges. Here we are. Again, that is based on our projects which we have done, based on the insights which we gained in different companies. So often, like I described before, my example with the scheme regulations from Crimea, is the data available? Is the data available in the right quality to really use it? Which comes to the next point. If the data is available, do I have all this data in my tools available? Because often I'm not only using one tool, I'm using a whole range of tools. And now I need to really injecting the data and linking the data and really making sense out of all this data across my tools. And that also leads to the point that I have different tools. I have a tool for account opening, for my credit card topics, issuing topics. So really using different tools, using different data across different use cases. And that is done by different teams. They might don't talk to each other. They might have different interests, different KPIs. So the overall picture is often missing. And as we have seen in the news article from the Danish bank, that they might have to cut jobs because they have to reduce costs at the end. And that means they might not have enough resources, or a lot of processes are very manual. And that's also a point where maybe Richard can maybe add a bit more flavor from his point of view, which kind of challenges he sees. We see right now in the survey that number 3 is winning, different tools, data for different use cases. So we can see quite a mix of results here, but that is the winner. The second one is different teams working on different topics. And that's often not a tool issue. That's often more an organizational topic, more change management topic, which we see in smaller organizations, but also in bigger organizations. And more companies are aware about this challenge. They are aware that they need to bring these teams together under one umbrella to really have this kind of bigger picture to make better decisions. Richard, any comments from your side?
No, that doesn't surprise me. I think the different tools and different teams.
Again, the audio.
I think, let's see, are other people having this? Because I'm seeing in the chat that people are actually hearing me, and it could be you, Ronald. I'll let somebody in the chat just confirm on that. I think I'll talk anyway. Let's assume that people can hear me.
No, Richard, I cannot hear you.
The key point here is that we can hear you. Yeah, we can hear you fine. Yeah, I think it's you, Ronald. Can you mute?
Okay.
The clear problem of the separation of roles is something that I think we're seeing quite a lot. The separation between the people who do, say, for example, KYC, the people who then do the operations around the individual transactions. And then ultimately, there is the investigation teams who have to then deal with that data. Because they're all dealing with different systems and different tools, communication is not smooth between those functions. Getting it more smooth between the functions, I think, really improves the situation.
Okay, perfect. Thanks, Richard. That's also your part now. So the stage is yours to really give some more insights how you as TigerCraft helping companies today to tackling all these challenges.
Okay, excellent. Thank you. So I think we started originally just presenting a database tool, some analytic tooling, data tooling. And what we found very quickly was that it was difficult to demonstrate value, particularly in this space. We were talking to very mature companies who were used to buying off-the-shelf applications. And so what we felt was we needed to be able to demonstrate why we felt that joining the dots between all the data was actually going to make a difference. So one of the first things we've done this year is to create a lot of standard visualizations, which we're using to demonstrate how this can work. And we're doing this at a number of levels. So we have dashboards at the top level, which are designed for executive and line of business work. We then have the operational customer-facing tooling, which is really about providing metrics on how your teams are performing in this space, be it in the individual transaction space or in the human operations side of things, the investigation teams. And underlying that, though, still we have these very powerful real-time analytic capabilities. And the reason to have these capabilities is so that we can get past this problem of different data for different people by actually joining all your data sources together and being able to use those data sources. And the other reason is so that when you use these visualizations, the people who are using these tools are going from static reports and moving into a space where they can actually move through the data in real time. They can look at the analytics. They can see what's happening between the various data points that they're actually looking at. So where is it used? There are three basic areas which are usually considered very separate in a financial services company particularly. And there's good reason for that. So you have your onboarding side of things, so know your customer activities. They traditionally have been almost one-off activities, but what we're seeing is that now they are starting to take on responsibilities to look for fraudulent activities, so not just first-party fraud, but account takeover. And that's slightly changing their view of the world. It means that now KYC, if it becomes a continuous process, then they need to start seeing the transaction information associated with that. Similarly, in transaction fraud, what we're seeing is that traditionally fraud was measured using simple rules on the transactions themselves, whereas to get the next level of transaction fraud, now counterparty risk is becoming a much more significant element. And so you want to be able to combine the traditional scoring aspect with a counterparty the counterparty information associated with that. And particularly if you do have continuous KYC where you're monitoring to make sure that the person is still the person you think they are, then bringing that into transaction fraud can greatly improve the scoring capabilities. Particularly reducing false positives is the key problem which we're seeing.
I have a question, Richard.
Sure.
You mentioned ongoing KYC. I think that is discussed in a lot of articles already, some companies doing this. Do you see this as a kind of new role, new activity, or is it more like a sliding trend that organizations or teams actually operationalizing this kind of topic step by step, or is it like a clear mandate, now we have to do ongoing KYC? What is from your point of view here, what organizations doing?
I think the clear mandate has always been there. but I think that the penalties associated with not doing it are becoming much clearer, particularly being driven out of the anti-money laundering space, but also simply because of the credit card liabilities. So, for example, we now have tap to pay, and the amount of money which you're allowed to tap to pay from a credit card is growing. They're just looking to change it to, I think, 100 euros or 100 sterling. That kind of thing is going to greatly increase the chances that a customer is not who they say they are. And because they are interacting in a very simple way, in other words, it's not very easy to verify identity, that continuous process of KYC becomes even more important, because as soon as somebody loses their card, or as soon as somebody starts transferring funds in a way that is unusual, you really want to be able to ask the question, is this the right person anymore? And so it simply comes down to liabilities and penalties, I think, is driving the trend in this area.
Perfect. Thank you, Richard.
So I think AML it's often talked about. I think what's interesting about anti-money laundering is that it's very much a regulatory concern. And so therefore, in the past was seen as something that could be done after the fact. Then there was a period when people basically reported so many transactions, it became almost impossible. So people were effectively sending every transaction above a certain value straight to the regulator and hoping that they could get away with that. Unfortunately, that doesn't really work anymore because the volume is so high. And so as a result, now people are looking at anti-money laundering as something where they actually have to look at transactions much more quickly, and they need to deal with that, particularly with terrorism legislation, as well as the standard anti-money laundering legislation, because of the political situations where what are called PEP lists, politically exposed person lists, are becoming more and more bigger and bigger, and they're starting to include all of the family members, where you have company structures where you need to know who are the beneficiaries of the companies, because they're after Enron and various other activities where this has been a problem. These are all driving a greatly increased amount of work towards the anti-money laundering function, with greater penalties associated with it and greater responsibilities. So that is almost a perfect storm of pain for most banks, who are now hiring thousands of people to try and deal with it. And that's just not scalable. It's actually now becoming a block on their business. So as a result, that is now pushing them to finding, how can we do this more efficiently? How can we actually avoid the problem where it's costing so much to process large transactions that it's just impossible for us to actually do business anymore. So it's becoming a real existential risk for certain lines of business within banks and financial services. Just to give an idea of what it means to join the dots of data and why this is hard, this is a list, it's a very simple list. This, I think, anybody who works in financial services could probably come up with a list which was twice this size. But the reason I put it here is just to indicate how hard the problem is for standard data systems. Here, I think I've got 36 or more separate, clear sources of data. We have internal data on the left, which is sources of data, which of course is held within a bank or a payment service, whichever financial service you're running. And then you have all the external data sources, which you will already have, things like address data, credit rating data from credit bureaus. We have the PEP membership here, is who are people that you need to treat very carefully if they're involved in a transaction, not just as counterparties, but as related in any way to the particular transactions. And so it continues. Offices held, beneficial ownership, tax domicile. These are all very clear sources of data that are actually very hard to integrate, and traditionally have only been integrated within specific functions. The idea here is, instead of limiting that data to specific functions is really to join the data together so that it could be available, if it was useful, for every function. That, say, for example, the three functions we showed, which was KYC and transaction processing and AML. Normal databases have enormous difficulty joining together more than 4 or 5 pieces of information. The step that happened next was what people did was they did very large-scale data lakes, and they ran batches overnight that would try and join this data together on a daily basis. But the problem with that is that doesn't help your investigation team. That's creating static reports. So it really tells you about what's happened in the past rather than what's happening right now, which is what you need for investigation teams. And so my argument is that you really need a data system that can give you this real-time joining of the data. And by doing that, bring this kind of capabilities into the operational space. I'm just pausing slightly between slides just in case any particular questions come up. And Ronald, please do jump in. So this kind of thing, people have been looking how to do it, but it was always looking like a extremely expensive thing to do. So the reason that we are, as a company, very popular in this space, and we're not alone, there are a number of people trying to do this, is that when you are looking at a problem of this scale, you need a very efficient implementation approach. And so we have a very standardized approach. And I'll go through some of the detail here a little bit. I don't want to get overly technical in my descriptions, if only just because a lot of people may not be more interested in the value than the technical detail. But obviously I can go into that in either in chat questions or later. But if we look at the flow of how you actually do this, and this is something that happens on a continuous basis because you will have new data sources appearing all the time, is first you have to get your data wherever it arises. And we will take data from wherever it already exists in the bank, or indeed from any data sources that are purchased, for example, from data bureaus and credit bureaus. Once you have that data, we have to actually bring it into the application, which for us means bringing it into the database. And so we have a system which has a very standard approach to taking the data and mapping it into this joined up view of the world. Once you have your data into the database, the problem you have is that the linkages are still internal. They're only internal to the specific data sources. And what you're really looking for is, as the title says, you want to join the dots across all the data. And so there is a process here which is called entity resolution, which is just a technical term for joining of data. But it's not always simple because, for example, addresses, names, locations, they will all be described in a slightly different way in different data sources. So there is no guaranteed way of linking that data. So the first problem we had to solve was, how do you link that data together? And we use a number of ways of doing it. Some are machine learning based, some are based on graph algorithms. And when I say graph, what I mean is this network database style. Is there are ways in which we can look for similarity that implies that things are the same. Once we've done that, then we are now in a position to have this joined up data. The joined up data, we can then perform standard searching. So we can join your 36 pieces of data because we've pre-created the joins. This is why we're quicker than a normal relational database. A normal relational database has to join the data together every time you run a query. We've done that ahead of time. This allows us to do queries across 40, 50 pieces of data at exactly the same sort of speed that you'd expect from a simple join on 3 or 4 pieces of data. And that's getting us into the region we talked about, which is, how do you support a tool which allows people to have a extended view of the data all the way from the beginning to end, but also can then actually manipulate that data and search that data in real time. So you're not waiting for overnight reports. You want to be able to actually get hold of that data and use it immediately. And then finally, on the right-hand side, we recognize that people already have probably 3 or 4 systems that do this already. And so the clear point is we need to integrate with those systems. We don't want to create yet another standard. It's almost a joke in the industry that for every standard, there is another 5 standards that follow it. And that's the same for applications, is that you've already probably got 3 or 4 screens in front of people. Adding another screen is not making the problem better, it's making the problem worse. So we try very hard to try and integrate with the existing screens and existing applications. If you're in transaction fraud processing or in anti-money laundering processing, then you'll know of systems like Nice Actimize is one which we did very recently. And the idea is that we can take the data that they already comes from those systems that are already there. We import it, as we've said. We then add the extra detail that we can get, so this extra intelligence we get from the very wide scale view, and we bring it back into the screens, the workflow screens they have already. So the idea is to enhance and augment rather than to replace these systems, as I say. In addition to that, we provide a number of these standard user interface pieces, which we really just built for ourselves so we could demonstrate the product. But now we've actually made it part of the product itself, so that with your partners, or indeed some systems already built for this, you can start surfacing this dynamic data insight capabilities in the screens that you have already. And that really represents the technical steps, if you like, that we can do this.
I have one question, Richard. So let's assume we have this 36 data points now in our system. We have the interface in place, and now new regulation comes up. We have to add 5 more data points.
Yeah.
Would we need to run through the whole process again? Or maybe you can give us a little insight or a bit of information. How would it work to add more data?
Okay, we follow exactly the same process. The key difference from normal ways of working is that if you add 1 data point or 1 data source, that is simply 1 more piece of work. It's incremental. It's linear in the number of amount of data. Whereas in traditional systems, you would have to go back and review all of your existing imports, all your existing schema. So what happens is that you have this exponential problem where the more data points you add, the harder it gets to add more data points. And that's exactly why these systems, people tend to buy an additional system rather than try and integrate with their existing systems. We address that directly. So if you have 1 additional data point, you will have to go through this process 1 additional time, and you'll only have to deal with that 1 additional data point. We can link it in, because we're all about linkage. We can link in that data without disturbing your existing database. And this is it's a very good question. It's a key capability, so that you can respond to the additional data sources and, as you say, the additional regulatory environments in an incremental fashion, rather than having to start from scratch.
Because the challenge, what I see is often adding a new tool is 1 step, is a massive project.
Yes.
I think the need or the goal is having an environment which is dynamic, where you can always add new data or new requirements, new thresholds, because it will come sooner or later, maybe not next week, but the week after. I think that's what companies looking for. They have a really dynamic environment where you can really plug and play with data and adding new requirements as they go, instead of rebuilding the whole infrastructure.
Absolutely.
I have 2 questions. Maybe you can give us maybe 2 data points from your examples. So if you're looking at a big bank today, how many data points do they typically have injecting into a system? And maybe the second question is, can you give us a feeling about how much data we're talking? Do we talk about 5 gigabytes, 5 terabytes, or maybe just a number for the audience to get somehow a feeling about the amount of data which we are talking here?
So for, I said that we were, there was a lot of the very large US banks use us, particularly, say, for example, on the onboarding case. I can give a very good example. They knew that this technology, they did a proof of concept work, and I can talk a little bit about what that proof of concept work looked like. It was, for them, it started off as a 6-week process and ended up, because the results were so good, it turned into a 3-month process so they could validate that the results were correct. That was a continuous engagement with us. We trained them to use the tool and the database at the same time as we did the proof of value work. The amount of data involved, it was initially a terabyte of data, and they're moving to 30 terabytes of data, which is a big number, particularly for a live database. Remember, this is not just 30 terabytes on disk and you look at it once or occasionally. This is 30 terabytes of data which is being continuously upgraded. Transactions are coming in continuously. Onboarding requests were coming in continuously, and they wanted that live view of the data so that for their investigation teams and for their KYC teams. And equally, that data was then exposed so that they could do some very advanced analytics over the top, so they could train their models overnight, their machine learning models that they would use through the day. So this was a 24-hour database running 30 terabytes of data live. We are implementing that right now, and that is simply a matter of scaling their 1 terabyte system. We just add more machines. So the actual work involved is quite trivial. It's very easy once you've actually started that process off.
Perfect. Thanks for adding this flavor, Richard. I think it's important for the audience. I mean, a lot of people coming from banks, they know the massive amount of data which they have. But if you're looking into this kind of topics the first time, it's always impressive how much data is lying around. Yeah, absolutely. And I think if you look at academic papers, since the 1970s and 80s, people have been talking how this graph analytics, this looking at relationships in order to get more information, how it could be done. But it's only in recent years with products like TigerGraph, which can scale large enough to deal with exactly the sort of data volumes that we're talking about. So it's bringing it into the real world. I think in the 90s, they started becoming available, but you needed a supercomputer. And so I'm thinking of, there's a few companies who do this. But it costs many millions of dollars just to start. And we're now getting to the point now where we're saying it doesn't need to cost millions of dollars to start. We can do POCs in a very short period, and with a small amount of data, with full confidence that if the results are good, you can then increase your investment according to need. So on that subject, just to give you an idea of what that looks like specifically. So this is an example proof of value pilot project, and this is not unusual. This one is how it would look for 8 weeks, and this really depends on the scope of the project. So if you want to go all the way from beginning to end, from KYC to AML, including transaction fraud, then that's a much larger scope. If you want a narrow scope, you want to test a specific theory or test a specific claim. Say we're making a claim that we can improve your fraud by 50% or whatever the number is. Then we can do pilot projects relatively quickly. And for us, it's important to do it relatively quickly because we want to be able to scale. We want to be able to prove this in as many places as often as possible. And we're not a huge company of thousands of consultants. We don't make money on consultancy. We make money on selling our product. This is a very strong push from our central management, is that we're not another product where you buy it, we'll give you the product for $10 and then we'll charge you $1 million for consultancy. That's not how it works with us. We are very clear that we want to prove the value very quickly and then move on. So given this, an 8-week process for this would look a little bit like this. You do the initial pre-work, which can take a variable amount of time depending on what the availability of people is. Specifically, decide what it is we want to do, that we want to get the value out of, agree who the team would be, so who's going to actually do this and what the success criteria are. So we're really setting the stage for building a business case immediately.
The other thing that usually happens in the pre-work phase, because it can often take a long time, because this is very confidential data often, is how do we get access to the data? Maybe it is data that's been anonymized. That's very common in the payment space, where they anonymize the data, and we can still work with it. But this means that we're able to satisfy privacy requirements. GDPR is an obvious one, but there are also many privacy and indeed confidentiality requirements for banks as well, in addition to GDPR, particularly financial implications. You don't want to be giving that financial information to a third party. Once that has been resolved, and then we can get into the main project. And this one, for an 8-week project, just to give an idea, if you remember, there were steps in the previous slides which show the steps in which we work, and it really does work exactly like that. We will configure the infrastructure, which for us can be on cloud or it can be on premise if you prefer to do it on your own systems. We'll quickly get that up. In work one, we can configure it and we can check the data to make sure that it actually is in a form we can use. So we are quite good at importing data from different formats, but we think spending some time here to avoid problems later we'll do that first week. We'll then do the mapping of data, which is where we import it into the system. And this really, we actually simplify the data rather than make it more complicated. If you've ever worked in databases, we talk about normalization. We don't do that. We simply import it the way it is in the first place. Then we do the entity resolution. We write necessary queries, we integrate the ML, so however we want to integrate it. In other words, how are we going to present this? And the idea is that then there are 2 weeks of activity to make sure that we've actually hit the criteria, we're actually proving the value in the way that we want to, but also we're answering the next questions. So it's always good to have a couple of weeks to answer the next questions when people say, that looks good, but how do you integrate with the system? What happens if we add extra data? Basically, just the questions that you had, Ronald. So this is a very normal approach, and generally in 8 weeks we can set that up.
Perfect. I think that's a really important point for many organizations. How fast, how long does it take to really prove value, even in a POC? So I've seen POCs would take months to even get started. And you don't want to know how long it took to really prove the value. That's often the kind of a showstopper, the kind of a roadblock for many organizations to really testing new tools or really leveling up, because they cannot really prove it fast enough to really go to the management and say, I need this budget or I need this team to really accelerate this kind of infrastructure. Yeah. That's why I think it's important what you pointed out. What are the steps which are needed, and you made clear why the steps are important. And I think it's important to also show to the audience that there are options on the market where you really can go in and delivering fast results.
Yes, and I have to say we've done this in 3 weeks before, where there was a very clear and refined view of already of what we were trying to do. So this is not 7 to 8 weeks is actually a nice, it's not too pressured. As I say, we have done it in 3 weeks, and particularly for this investment bank where they wanted to check enormous amounts of data, it took a bit longer. So obviously there is variation here.
Perfect. I think there's one more slide, Richard. We also have to look at the time. Yeah. So we have a few questions.
Yeah.
So maybe you can wrap this up maybe in a minute.
Yeah.
And then we can go to the Q&A section.
Yeah, I think, and really this is just an overview of what I talked about. If you'll have architecture teams, then architecture teams want to see how it's all going to integrate and how it's all going to fit together. This is really just a slide to cover that and to give a slightly technical viewpoint. I think it's probably out of scope for this presentation, but certainly I'd be delighted to talk to people on an individual basis about all the pieces here. As you say, I'd rather make sure that we're answering the questions and spend a lot of time on the technology.
Perfect. Good. Thanks, Richard, for these insights. We have a few questions. Maybe the simple question first. Yes, sharing the presentation afterwards. So a few people ask about this. We will get the information, and also at the end of the presentation of our contact details. So if you have specific questions to Richard, please feel free to reach out to him. Same on my side, and we will send the presentation later. Also, before we go into the question, also please feel free to follow us on LinkedIn. We're also sharing always a lot of insights, a lot of updates. But let's jump into a few questions. We have, let's say, 4 minutes left. One question may be good for Richard, because with the MasterCard background, what kind of general compliance required by a payment service provider for online credit card payments of merchant-specific services? So that's a question which came up. A very broad question.
Yes. It really depends. Most of the rules actually come from the scheme, so it comes from MasterCard as much as it can. But there are also responsibilities in terms of the way that what happens if something goes wrong. So there is some regulations around that which are specific. And then, of course, we have privacy regulations, which say that one has to have privacy. So those are the things that you generally see. And then the final ones are more commercial ones, so service level agreements. So guaranteeing to transfer funds, guaranteeing to have particular, you need to have a certain amount of cash on hand in order to run one of these systems. So there's quite a few PSP requirements. Also, they vary by internationally. So we did some work in India, for example, and that has a much higher level of regulation around what a payment service provider can do. And I think we're seeing that that's coming across the regions as well. So really, it's very similar to banking requirements now. They're starting to, I think, converge very much on the requirements here. But you've also got some commercial pressures as well because of the way it works.
Mm-hmm. I just want to add maybe one more flavor. I think there are a couple of bigger bullet points. One is about the merchant itself. As you mentioned, for merchant-specific services, so really about the merchant onboarding, the merchant underwriting, the merchant monitoring. So that's really already a big part. And then you have all the transaction-related topics, the PSD2-related topics, the PCI topics. And as Richard mentioned, depends on the market. You have even more compliance checks or others. What I think we're going to do is we have a couple of more questions, but we're not going to cover all of them right now. We're going to save the questions and coming back to you. There are some questions came in privately, so I also will make a note here and coming back to the people who raised the questions. But again, please feel free also to send us an email if something pops up later where you want to get some more details. Perfect. Richard, thank you so much for joining today, our first webinar in 2021. We got some good insights, some ideas, and I hope that we brought also good, interesting topics to our audience. Again, please feel free to provide feedback that we also can incorporate this for our next webinars. Richard, any last words from your side?
Just to reiterate, please, my contact details are there. Please don't hesitate to ask questions, anything that I can possibly answer. Equally, if there's any detail from the presentation that you want me to elaborate on at another time, then do let me know. Thank you.
Perfect. Then thank you very much and have a good day and stay safe. Bye-bye.
Bye-bye.